Effectively, it's like Wall Street type money. You need to go to banks, Wall Street, insurance companies, hedge funds, REITs, all this kind of stuff are pumping in money to create this loan product to loan out these dollars to people. And it's where you can borrow $2 million or $3 million or $1.5 million when the government-backed versions will not loan you that much.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
We're seeing a lot more of this as the median price of our of homes here in Southern Nevada has stayed at just under 500, 480, 490,000. Yeah. But the reason it's staying there is because the high end of our market is so active. The million plus, the 3 million plus.
Yeah, we're building a lot more of those homes than ever before.
And there's more people buying them than ever before.
Yeah.
And so there's a product out there. Basically, what I wanted to explain to folks first of all is that when you buy a home and you borrow money, there's a conventional loan will only go up to a certain amount. They'll stop a conventional loan.
Right.
And you said the numbers.
832,000 approximately.
832,000. So if you're borrowing more than that, then the loan becomes what they call a jumbo loan.
Right. So it's this arbitrary line that we've decided on.
Yeah. And that how is that line determined? Where's that come from?
The FHFA, so the Federal Housing Finance Agency, works on releasing this numbers. Basically, they bless it for Fannie Mae and Freddie Mac to roll it out every year. Comes out probably late December, right around Thanksgiving. They say, okay, here's next year's number. And they're adjusting this number annually to try to service the marketplace overall.
Gotcha.
And so they determine like what is the right number, and they set it from the perspective of here's our maximum loan size in your area.
Okay.
So it's worth noting that like Las Vegas or Nevada, basically this 832 number, there are high cost areas in the country where it's 1.25 million.
Oh, so it's higher elsewhere.
Yeah, it's
it could
higher
be higher
in these
elsewhere.
high cost areas, right?
Okay.
So they acknowledge that. It's also different if you have different property types, duplex, triplex, fourplex.
Oh, okay.
Goes to like 1.6 million
in
those areas, right? As you start looking at fourplexes. So anything above that, you need to go to these jumbo loans is the label that I give it, but it's like Wall Street type money. You need to go to banks, Wall Street, insurance companies, hedge funds, REITs, all this kind of stuff are pumping in money to create this loan product to loan out these dollars to people. And it's where you can borrow $2 million or $3 million or $1.5 million when the government-backed versions will not loan you that much.
Gotcha.
And yeah.
Is it so if I need to go to a jumbo loan, am I going to pay a higher interest rate for that?
It ebbs and flows with the sort of the demand and the risk in the market. At this moment in time, I would tell you it's slightly better.
Okay.
In many cases, it is very sensitive to how safe the loan is.
Okay.
So whether you doing a small down payment or a bigger down payment, whether you're taking potentially alternative approaches to your income or your qualification, these are reasons to raise the risk level of the loan, and so those rates could be higher. It's really a matter of the appetite of the investor to loan you these millions of dollars potentially, and to generate a profit on you.
Is the process of getting a jumbo loan more scrutinous than for a conventional loan?
I would call it like more detail.
Okay.
The shortcuts that we allow for in the vanilla loans, the government-backed FHAs, the VAs, the conventionals, that kind of thing. There are these certain shortcuts that we've decided on to say this is still a safe loan to give. Many of those shortcuts don't exist in the jumbo world.
Gotcha.
Because they don't want shortcuts. They want to know what they want to know. Big example is like in the world of major negative credit events. Think like I had a bankruptcy.
Okay.
Well, FHA is fine after 2 years. Conventional is fine after 4 years. Jumbo frequently is 7 years.
Oh, wow.
Or even never at all.
They're just not doing it.
Yeah.
Okay.
And so they've written their own rules on these sort of things. Tax returns are more common, and they look at the level of details and may ask you to explain more or that sort of thing. And that's the big difference. Can it be harder? On some people, it'll be harder. Other people, not so much. And
then there's layers to that also, because I know individual institutions might increase or change the rules.
Yes.
They have a bare floor minimum that the FHA provides, but they may make it even more stringent. Some lenders would be a little more harsh on that.
Because each of these lenders knows that the jumbo loan that they make, and it's, let's say I'm loaning somebody $1.5 million, there is no automatic marketplace for that loan. I have to be prepared to hold that loan out of my dollars today. Gotcha. If I make that loan, there's no government to buy it from me automatically.
I see.
Hopefully there's a market where I could resell it and get my dollars back, but there doesn't have to be. And so you have these kind of individual risk decisions that are made, or the individual criteria. So in the world of jumbo lending, the loan is different from 1 to 2 to 3 and so on.
Now you could get what in effect is a jumbo loan with your VA.
Yeah. The VA, their rule recently, they revised it and said, hey, there's no longer a limit on what the VA will guarantee in these certain circumstances. So can you get a $2 million VA loan? By rule, yes.
Yeah. And so, yes, and you still have to have the income to qualify.
Yeah, and you still have to be able to afford it.
And the credit, you have to be able to afford it, but you could do that.
Yeah.
Can they do it with no money down?
Yes.
Wow.
Yeah.
That's amazing.
And it's complex, but effectively, if it's my only time I'm using my VA loan, like I don't have any other VA houses,
right,
you can do 0 down on the entire amount, regardless of price.
Wow.
If you can find a lender to do it.
Yeah.
It's much rarer to find a lender who's willing to do a 0 down $3 million VA loan.
Yeah.
But it's possible.
Yeah, I would think you'd probably have to have $5 million in the bank.
Right.
To do that.
You might have to make that lender comfortable loaning you those dollars.
I would think so. But it's nice to know that it's possible. So if there's a vet out there who's had some success in life and he wants to take out a loan, he can use his VA eligibility for that.
That's absolutely right.
We encourage all of it. I mean, it's so funny. When I was doing the program with the other vets, and the vets did the program earlier on KDON before, and one of the big things about veterans was they felt like this was some kind of a charitable thing. It's not, guys.
No.
You've earned it.
Yeah.
You've earned it. And it's not, and the bank's not giving you the money for nothing. You're still going to pay interest.
Right. Just like your 401k, you earned it. It wasn't like a charity.
Right. It's yours. You deserve it. And I love doing VA. I love doing deals for vets, and I love doing VA 100%. Loans. I think they're really the best product out there, honestly.
And mechanically, compared side by side, it's still the top product.
Outstanding,
in my opinion.
Okay. So when we talk about jumbo loans, and you talk about, so when you're dealing, let me ask you this: when you're dealing with somebody in a jumbo loan, is it a different circumstance for the lender? Is that a different circumstance for you?
Not really, other than there's different rule sets and different approaches that I potentially have to be thinking about when I'm qualifying them and what I have to get them through. Maybe there's, as I said before, there's less shortcuts to take, less things that I can say, we don't have to talk about that or worry about that. That's possible, right? But totally fine. I think it's surprising to people to find out, there's lending out there for like $1 million with 3% down, for example. That exists in the world.
Oh, okay.
And you can do 5% down on like $1.5 million.
Wow.
What we see in the industry overall is that the larger you go, the more stringent they get. So, of course. 5% down on $3 million, I doubt you're going to find that.
Oh, yeah.
On $1.5 million, yeah, you can find it.
Interesting.
Right. And it does all go back to your ability to qualify and all those sort of things. But the idea that is there an investor that's willing to make that loan? Very, very potentially.
So would there be mortgage insurance on that?
Frequently, yes, there is an insurance.
But it doesn't have to be because it's not a conforming product.
They can write their own rules. And I'm just thinking right now of in the world of doctor's loans. This is a specialty loan product that Wall Street has out there. And those frequently don't have mortgage insurance on them, even though you're doing 0 down or 3% down or something like that.
Right.
And so they can carve out these shortcuts based upon their own sort of financial interest, as my jaded heart is going to say. But if it's a safe loan to make and there's a method for it, then they do it.
Great. I mean, look, I think it's an important distinction. I know when I'm marketing a property, I'm cautious and careful about that threshold, that $830,000 loan value.
It's material for sure.
It's very important to understand, for my seller to understand that now your buyer, should they need to borrow money in excess of this amount in order to buy your home, they have to qualify in a different way. They're going to have to go through a different process. And so they may be more reluctant. They may be a little less likely to do so. Right. That's why I think a lot of times when you're dealing with these high-end purchases, when you're talking about $2 and $3 and $4 million homes, a lot of them are just cash deals because they don't want to be bought, and I love the fact that they have the money. Yeah, God bless them. But it is, and the other thing is that this has come up many, many times. People who are used to doing business and just going into a bank and saying, "Where do I need $3 million for this? Where do I sign?" And they just give them the money because they know that this, he's got $10 million in their bank. Right. That's not the way with a home loan, guys.
No, it isn't.
You got to go through the scrutiny, no matter what you got, no matter where you got to go through the same process, no matter what, guys.
Right. And what I see like in our industry is like people that have, let's say, that $10 million in their stocks or whatever.
Right.
You can get a loan without necessarily going through a bunch of rigmarole, but it's a loan based upon your stocks. It's not a real estate loan,
Right.
Or a housing loan, as we have in our law and in our systems written all these protections into.
And a lot of them came out of the housing crisis in the mid 2000s, and Nevada in particular put in rules to say, look, you guys can't loan money to people if they can't afford it.
That's
you
exactly
cannot
right.
do that.
What is the payment on this new loan, and prove that this person can afford it? Is the idea.
Yeah.
And it's why we're not seeing, at least in the state of Nevada, these totally stated loans for people to buy houses to live in.
Yep.
The closest thing we have in our world is maybe these like DSCR loans that are looking at, I'm buying an investment, I'm treating this like a business, and I'm looking at the cash flow of that property to pay for itself.
I see.
And that's all the loan looks at. That's a legit thing, but that's business now.
Yeah.
It's not the same protections as you buying a house to live in.
It's not a conforming loan.
Not at all, for sure.
And so that's the thing that people, and you have to understand the nature of conforming loans. Conforming loans are designed to help people buy homes, to make it more accessible to the vast,
and make it a universal marketplace.
Right.
Whether the stock market's doing great, whether our country's doing bad, that loan should always be available for you. There's a sort of a universal supply of dollars for Americans to be able to finance their homes.